Now, once you've selected the company at the sec.gov or wherever else you can find it, Yahoo Finance, but I prefer you go to sec.gov under Edgar Filings. That way you'll get I want to make sure you're getting an accurate 10K report. Again, we're looking for the 10K report. Most recent 2 to 3 years. 2 to 3 years. And then what we're going to do is we're going 2 to 3 years, right, 10K report. And the first thing you're going to do is explain what you know about this company or the industry. Try to talk about the industry as a whole, what you know about it, or the specific company. So ideally, you'd pick an industry that you know about and a company that you know of. So you can begin talking about the industry, then you dig deeper into the specific company and talk about how that company operates within the industry. That would be the best way to handle that. Then you get into the revenue trend. The revenues are not net income, it's revenues, how much money the company made in sales. And you want to go over the past 2 to 3 years and explain if the trends are going up or down or if they're level. And keep in mind what's going on with the economy as well. Maybe they're in an industry that's doing exceptionally well. Maybe they're in an industry that's doing extremely poorly. For example, maybe the home building industry. They would be doing very bad in the past couple of years. Then we want to go into cost of goods sold and expenses. And just like the revenue, we want to any expenses much higher or out of proportion than usual. First, you want to stop by explaining the trend, what's going on with the revenue, what's going on with the expenses, and what's going on with the cost of goods sold. Talk about the trend. And then go on and talk about any expenses that may be exceptionally higher the past couple of years, the past year or so than usual. We want to look for, this should be a consistent trend. Not always, but there often is a consistent trend. You know, payroll, for example, or rent, or payroll or rent might be 10 or 20% of revenue in the past couple of years, and all of a sudden, if payroll jumps up to 40% of revenue in 1 year, then there might be something out of proportion. So again, we're looking and trying to explain any usual items, any one-time items. Maybe there's a one-time expense for loss or something like that, or a discontinued or extraordinary item. Try to identify and explain any unusual items, anything that doesn't quite make any sense to you. Please research it and then try to explain what's going on with it. Next, we want to look at the net income trend. The net income, revenues minus expenses, is going to be net income. Again, everything should remain in portion. Net income will always be 5, 10, 15, 20, 30%, whatever it might be, of revenue. And you want to see if it stays proportionate, and if not, try to explain why it is proportionate or why it's not proportionate. And again, which way is the net income trend going? Are they going in the right direction, or are they showing they're losing money, or headed in the direction of losing money? Next, we want to move on to the balance sheet. And we want to explain trends for assets, liabilities, and equity. Remember, assets equal liabilities plus equity. And then break down the common stock and retained earnings as well. There's 2 sections under equity, common stock and retained earnings. What type of categories does this company have in each section of the balance sheet? Try to give an example of the category. Of course, you're going to see under assets, you're going to see cash, accounts receivable, property, plant, and equipment, inventory, things like that. Under liabilities, you'll see notes payable, accounts payable, salaries payable, things like that. And under equity, you're going to see, of course, common stock, retained earnings, things like that. You may see treasury stock, but just try to focus under equity. Try to just pay attention to common stock and retained earnings for now. So again, under equity, just try to pay attention and keep your focus on common stock and retained earnings. So again, under the assets, just break down the categories and give an explanation of each one. Under liabilities, an explanation of each one. And of course, equity, common stock, and retained earnings. Then what you want to do is explain the trend the past couple of years. For example, cash under assets. Has their cash position been going up or down the past couple of years? What about their notes payable, meaning long-term notes payable to banks and other lenders? Is that rising or falling in the past couple of years? That's how to explain the trend. Remember, what we're looking for is trend lines. We are looking for to explain trends, trend lines. That's what we're looking for here. Now, the statement of cash flow, step 6. We want to give a detailed explanation what's going on with each section: financing, investing, and operations. Financing, well, let's start with it. Financing. Cash should hopefully be going out towards financing and little will be coming in, meaning they're paying off loans if they have them. Investing. It's nice if a company has some investments going out from time to time, or maybe some investment coming in. Operations. Under operations, most of the cash should be coming in from operations, meaning what they're doing for a business, that should be generating all the money. So in an ideal situation, they'll always have a positive increase year over year with operations. Net cash from operations should hopefully always be higher each and every year. Areas of concern will be if you see financing. If all the money they have for their business, all the cash is coming in from financing or investing, meaning they're selling off investments, and very little is coming in from operations, that should be a real red flag for you. So again, financing means all they're doing is borrowing money, and that's how they're living off borrowed money. Or investing, if all the cash is coming in from investing, means what they're doing is selling off investments to survive, and very little is coming in on operations. So again, always make sure that most of the cash for their business is coming in through operations. That's what to look for. So please keep working on this. Feel free to put together a rough draft, send it to me, and have me look over it. That way you can get an excellent grade on this paper, and more importantly, get as much out of this project as possible. By the end of this project, each and every one of you will be well versed in how to pull apart a set of financials and do a good thorough analysis. Thank you for your time.